Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Messer and Tim Stenevec from Bloomberg Radio.
Certainly top of mind for us is Boeing today. I'm just pulling up the company and some of the stories on it, and you've got kind of 3, 4, 5 stories that are all important, and all has to do with an expected deal that is going to be done between Boeing and the federal government.
Yeah, shares higher right now by 0.8%. They were lower earlier in the session, and before that, they rallied. This after overnight, Boeing said it would, or we learned that Boeing would plead guilty to fraud for violating and crash this deal. Other news, though, that's on our radar is the company in talks with the U.S. to preserve its defense contract business, and the FAA saying thousands of Boeing jets need oxygen generators checked.
Well, and this is what's interesting. So if they're pleading guilty to federal charges, they have to talk about their potential path forward with the U.S. Defense Department to preserve the contract business, government contract business that Boeing specifically has. And so this is according to people familiar with the discussion. So they're talking about this. What does it mean? And so those government contracts have been very important to Boeing, maybe even more important than ever, as it relies on the defense division to really counteract some of the plunging revenue of its commercial aircraft business. So there are a lot of moving parts going forward on this, Tim.
It's not just that, Carol. It's also that the company has a search for a new CEO that is underway. That quickfire cadence of deals with U.S. prosecutors and a key supplier just sharpens the attention of its board and investors on the next big task ahead, which is finding that new chief executive officer to lead Boeing out of its rut.
Yeah, it does make me wonder, you know, our reporting on this plea, or Boeing pleading guilty to criminal conspiracy, once it's done, it's expected, this final plea agreement, by about July 19th, that you do wonder, once it's done, does that kind of open the door for then maybe Boeing to move forward on, okay, who's the CEO we need to take it into the next chapter?
All right, well, let's get on over to George Ferguson, because he joins us to talk all things Boeing right now. He's Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. He joins us from Bloomberg Intelligence headquarters in Princeton, New Jersey. George, good to see you. Is this good news in the idea that it brings us close to another chapter and sort of avoids a legal battle playing out publicly for Boeing?
I think it is, right? I think that whatever court case would have followed if Boeing contested it would have probably taken place sometime next year or later. It hopefully would be at a time where Boeing was in the middle of recovery mode and not wanting to talk about this chapter in its history. I think really, whatever deal gets cut, the U.S. government needs Boeing as much as Boeing needs the U.S. government. Yeah. So I don't see them being locked out of federal contracts. And I think Boeing really needs to get on to the next big obstacle in the way of its second half recovery, and that's going to be getting a deal signed with their major union up in the Pacific Northwest, so they can keep building airplanes and not end up in some sort of strike situation.
Can you help me out here, though, George? Is this the equivalent, though, of Boeing being a convicted corporate felon?
So I'm gonna punt a little bit and tell you I'm not a legal expert, but they are settling, admitting. But I think they had sort of admitted this previously.
Okay, yeah.
And the complaint was that they hadn't put all the processes in place to remedy the situation, right? That they had agreed to. And I think we can all agree. We all know there were problems. There were serious problems inside Boeing and its suppliers. So I don't think that's any surprise to anybody.
Okay, the company's going to install a corporate monitor and be required to spend at least $455 million to bolster its compliance and safety programs. This over the next 3 years, George. It's all part of the deal. The deal does require court approval, but then they also gets a subject of court-supervised probation. Does all this fix what needs to be fixed at Boeing?
I suspect that it's not enough to fix what's broken inside Boeing. So I suspect that they would have to go. They'll spend much more than that $450 million. They'll have much more than just the outside, sort of government, agreed with the government supervisor. I suspect there'll be a lot more to be done to get Boeing back on the right track. So I think it's a, what's the old saying? It's a cup of water to a drowning man. I think it's...
Yikes.
Not that Boeing's drowning. Sorry.
Well, no, that's okay. It's interesting. The in our reporting on this, the lawyer from the firm that represents the families of the 737 MAX crash victims says it's just a slap on the wrist. But I'm trying to understand, companies often pay fines but admit no wrongdoing. Boeing is saying we were guilty. So is it a slap on the wrist? And I'm not looking for the legal, but as someone who follows the company and, is trying to think about the business forward, it's serious, right?
Look, I think the admitting that they hadn't put in place something they had agreed to is bad for the company, is wrong, right? And we know they've gone through this troubled time where they didn't have the right processes in place and supervision in place. The money involved, it's a very manageable amount of money for Boeing, right? I think no shareholder wants to see money exit the company for these reasons, but it's a very manageable amount.
All right, so that is a manageable amount. What about, though, that the company has said it's going to burn, about $8 billion in cash during the first half of this year? Is that manageable? Will they survive financially?
So that's not manageable long term, and that's kind of why I think this makes a lot of sense to put this away now, because what they need is a second half recovery, right? They've told us they think they're going to burn another $4 billion or so cash in the second quarter, so that would bring them to the $8 billion you were talking about. To stem that burn, they need to start delivering airplanes in the second half of the year. We haven't seen June yet, but we don't think it was great. So probably they delivered less airplanes in 2Q than they did in 1Q. Now it's time to stem the slide in deliveries, get airplanes to customers, put cash, bring cash into the company, because we think there'll be around $13 billion in cash when they start off the third quarter. You can't keep burning $4 billion a quarter and survive very long in that situation.
Hey, George, our own Bloomberg News team reporting that Boeing is also discussing a potential path forward with the U.S. Defense Department to preserve its government contract business after the company agreed to plead guilty to a criminal charge tied to two fatal crashes of its 737 MAX. It's what we've been talking about. How are you looking at the future of the government contract business? You already said that the government needs Boeing as much as Boeing needs the government. Yeah,
so I just think that the U.S. defense, the primes, they've been whittled down to sort of 4 or 5 big companies. So when I think of some markets like a fighter jet market, right? So typically when you'd go out and compete a fighter jet, you might go to Lockheed Martin, you might go to Boeing. Boeing's built the F-15, the F-18 in the past. Lockheed's builds the F-35. They've built the F-16. I'm missing a couple fighters in there, but you get the point. You want two competitors, right? When you come out and you bid on things like that. So I think we're at a level in the U.S. defense industry where we're just at the manageable, number of contractors to keep things competitive. The Pentagon understands that, and I think they're going to really want Boeing to be a survivor and participate in the market. And I don't think you want to break the company up, because I think that defense business provides the stability you need in downturns for the commercial business. So, that's kind of the way I think about it.
That makes sense. Hey, 30 seconds, one last question. Any new whisperings on a new CEO for the company? Might it come after that final plea, which some are saying would come in 11 days?
Not that I've heard of. Maybe the CEO's waiting until the negotiations with the union is done or something like that. Waiting until summer's over. They don't want to get off the beach too early. But no, I haven't heard any good news.
What is it?
It's always about the beach.
Yeah, everyone gets to go to the beach in the summer. It's like
the new metric. It's a new function on the
works?
Bloomberg Beach Go.
Wow.
Explains so much. George Ferguson, you explain so much always. Bloomberg Intelligence Senior Aerospace and Defense and Airlines Analyst, George Ferguson. Now, Boeing also facing investigations, we should point out, by the SEC, Congress, and a Seattle grand jury.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, our most read story on the Bloomberg today has talked about President Biden taking pen to paper to really quell Democratic infighting about his presidential campaign, saying he was determined to remain in the race and challenging dissenters to end talk of his removal from the ballot.
Here's what he wrote, quote, "I'm firmly committed to staying in this race, to running this race to the end, and to beating Donald Trump." This is according to a 2-page letter addressed to Democratic lawmakers and released by the campaign from President Biden.
Now, the president also, in an unscheduled call this morning on MSNBC, confirmed his position about not going anywhere, despite reports of prominent Democrats, fundraisers, and others who may be saying otherwise.
But I don't care what those big names think. They were wrong in 2020. They're wrong in 2022 about the red wave. They're wrong in 2024. And come out with me. Watch people react. You make a judgment.
All right, that, of course, was President Biden, a phone call into MSNBC earlier today. Meantime, the great race is on when it comes to polling. Post-President Biden's debate performance over 1 week ago, we turn now to a Bloomberg exclusive and Bloomberg News White House and politics reporter Gregory Korte. He's in our Washington, D.C. bureau. Gregory, great to have you here with us. This catching our attention over the weekend as it came out. Tell us about this poll. Who was polled? When did it happen? All the specifics. Lay it out for us.
Yeah, this is the first poll of the swing states, a comprehensive poll since the debate. The other polls that you may have seen out there have all been national polls. This is one that looks specifically at Arizona, Georgia, Nevada, North Carolina, Pennsylvania, Michigan, and Wisconsin. Those are the states that are most likely to decide this election. And what we found was a little counterintuitive, and that is that Joe Biden is behind Donald Trump by just 2 percentage points across those 7 states. He's up in 2 of them by pretty healthy margins in Michigan and Wisconsin. And so this is his best poll since we've been doing this last October, and we talk every month about these polls. This is his best one yet, and that's a little surprising given all of this attention that's been paid to his debate performance.
A little surprising. I mean, I was Gregory, I was
Shocking.
extremely surprised on Saturday when these results were published that the polling went this way, given that the focus since the debate has been a potential change at the top of the ticket. How do you explain it? What did voters tell you? What did voters tell the pollsters?
Yeah, my inclination always is that when you have data that contradicts the narrative, you should probably adjust your narrative more than worry about the data. Having said that, this is one poll. I would like to see some confirmation of this in other polls. We're very proud of this poll. This is the Bloomberg News Morning Consult poll. It's got a high sample size. It's got a low margin of error. But 2 things can be true. One is that people say they'll vote for Joe Biden, but also wish they had a better choice than Joe Biden. And 30% of Democrats say they wish they had somebody else on the ballot to go against Donald Trump. So you ask, why is this poll different from some of the national polls? And I have sort of 3 theories on that. One is our poll was in the field a few days later than some of those national polls. We started on Monday as opposed to Friday. That might have given voters a little bit more time to digest the debate performance and think about what it means. Also, Joe Biden has been outspending Donald Trump in these swing states by a 5-1 margin. He softened the ground before the election, and he came out with new ads after before the debate, and he's come out with new ads after the debate. And then the third thing is, this is also our first poll that we have taken at Bloomberg News since Donald Trump was convicted on 34 felony counts. So voters haven't forgotten about that just because Joe Biden had a bad debate. The negatives on both of these guys are extraordinarily high, but they've got to choose one or the other, and we're getting on towards the season where we have to make those choices.
Was it before or after the Supreme Court decision in terms of immunity for former President Donald Trump?
This poll was in the field after that Supreme Court decision, so that may also have been something that voters were factoring in.
You know, it's funny. I guess that when I think about this, because I wonder if ultimately we'll think this is an outlier, but you guys have been doing these polls, right, going back to, I believe, October. So is there something, historically, you can already within a few months, historically, like look and reference and say, well, those polls have been on the money, and so you do make some conclusion about this one. Or you say some of the other previous polls maybe didn't. You said that they've actually, have had a low margin of error.
No, I obsess about this, and so I look every month about where we are compared to the major averages. Real Clear Politics is one of them, 538 is another, and we're usually no more than a point or two away from those averages. Of course, we're also influencing those averages because we're part of those averages, but I think the poll hews pretty close to what other polls are showing. But that doesn't necessarily mean that that's going to continue to be the case. And as we've talked about, by definition, 1 in every 20 polls is an outlier, which means that the results are outside the margin of error. They cannot be explained simply by the random sample that we generate here. And so that remains to be seen. We would like to see some more polling on this. But for now, this is a good poll for Biden. The Biden campaign was circulating this poll all weekend. But it's worth noting that even though this is his best poll, it still shows him losing the Electoral College if what we found in this poll ends up being the result in November. Biden still loses by a considerable number of electoral votes.
Okay, and that's if your goal as a voter is to vote against a potential additional Trump presidential term, Gregory, then maybe you'd vote for Biden in this case to vote against the former president. Is there any other candidate out there right now who could replace Biden at the top of the ticket who does better, according to the polling that you've seen or the polling that you've done, than the current president, Joe Biden?
We didn't ask that exact question this month. Last month, or I should say in May, we asked that question. We found that Kamala Harris, the vice president, did worse than Joe Biden in a head-to-head against Donald Trump. But then CNN came out with a national poll last week that said Kamala Harris was doing better. So that might have changed. She's certainly the preference of Democrats. When you ask Democrats, who would you like to see replace Joe Biden on the ticket, if it came to that, 77% of them say Kamala Harris is their top choice. And that's driven a large part by name recognition, right? She's the incumbent vice president. She has been Joe Biden's understudy for 3.5 years. She is perceived as the most prepared to take on that role. But other names are out there as well. Gavin Newsom, Gretchen Whitmer does very well in this poll. Of course, she's the governor of Michigan, which is one of the swing states, so that explains why she has a little bit better name recognition in this poll. But there are some other candidates out there. But at this point, as you talked about, Joe Biden just this morning came out and said he's running again. He has no intention of stepping aside and releasing his delegates.
Are there more double haters who don't like either candidates or more undecided? Or are they kind of the same thing? I'm just curious how you were thinking about that. Because in some elections, right, these have been important voters that could decide the elections.
Yeah, we see those, certainly the undecided voters should tend to come down over time. The other thing that we are seeing in this poll, and this kind of goes to the point that Tim brought up a moment ago, is that Robert F. Kennedy Jr., who has mounted this independent campaign, we've seen his numbers slowly slip from cycle to cycle each time we do this poll. He was at about 10 or 11%. Now he's down to about 7%. So as people begin to grapple with the fact that this really is a choice between Joe Biden and Donald Trump, you see the number of undecided voters go down. You don't necessarily see the number of double haters go down. As a matter of fact, debates tend to exacerbate that double hater effect. They tend to be polarizing. People tend to look at debates and hate the other guy even more than when they started. So we may well see the double haters come up through November. The big problem for both of these campaigns that they're trying to deal with is, let's not have these people hate so much that they don't show up. And so that's going to be a challenge, especially on the Democratic side, to keep their base motivated, even through all these concerns about the president's age.
Hey, Gregory, do we know, or do you know, where the voters who previously in earlier polls said they were supporting Robert F. Kennedy Jr., which candidate they're going to?
I mean, that's a good question, and I haven't looked at that too in depth in this round of polling, but what we have seen throughout this cycle is that Kennedy takes pretty much equally from both sides. Now, that doesn't mean that both sides are willing to just call it a wash and say, as long as he's taken from the other guy too, we're not going to worry about it. Both sides are very worried about this, and what they're trying to do is paint Kennedy as an extremist in the other camp. So to the Trump campaign, Kennedy is way to the left of Biden. the Biden campaign and Democrats are going to try to portray him as right-wing, especially on the issues of vaccines, on some of his more unusual positions. His position on abortion is sort of a riddle. So we're going to see both campaigns continue to try to take votes away from Kennedy and bring them back home to a two-party vote.
Well, Gregory, as we've said it many times already, an interesting election cycle, no doubt about it. Look forward to the next poll. Bloomberg News, White House, and politics reporter Gregory Korte joining us from our bureau in D.C.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Is who's trading in this market? Well, think back to 2021, the meme stock era, when legions of retail investors flooded the stock market, eager to chase the stock of AMC and GameStop and the like. It was a fever that we're sure to break, right?
Yeah, no doubt about it.
Okay, when rates went up, the stimulus checks stopped, and everyone had to go back to the office?
Yeah.
Did that happen?
Abundantly clear.
Yeah. It all stopped. Nothing, meme stocks stopped, right?
No, we are living in a new age of finance. It's never been easier to bet your money anytime, anywhere, and meme stock craziness is here to say, so is gamification. It is on.
Claire Ballentine is Bloomberg News personal finance reporter, and for Bloomberg Businessweek, she writes about the new age of market speculation. Claire joins us here in the Bloomberg Interactive Brokers studio. Check out her story on the Bloomberg terminal and at bloomberg.com/businessweek. So Claire, is this all about a smartphone? Is that what it is?
It's easier than ever. You have it in your pocket.
Is that why the meme stock will never die?
I think that's a huge part of it.
Yeah.
I mean, there are a couple of forces. Obviously, there's the these apps that make it easier. There's, everyone has an iPhone now and can trade, when they're on the subway or just walking around. And then there's also the move to no fees. So there's very little cost or friction between young people and anyone who can just trade in and out of stocks with ease.
How much of is it the ease? I also thought was interesting, Tim and I were talking before we got going, that you could now just buy a slice of a stock. And I think about fractional ownership has made it potentially much more accessible.
Yeah, I mean, we live in a world now where these new investors coming up, these are, the Gen Z, the young millennials, they don't even know what it was to have to pay fees on stock trading. They have no idea that fractional shares were one time not a thing.
Right.
They just operate where if they see a company that they're interested in, they can go out and buy it, no problem.
What do you like? What?
No, I mean, if you think about the name Odd Lots, the popular podcast, right? The whole idea is that it's less than the normal unit of trading, right? And it's sort of a historical anomaly that you would need that because of fractional trading and because it's so easy to buy and sell, Claire. And the whole game has completely shifted. I guess my question for you is, net, is this a good thing?
I mean, I think there are pros and cons to it. The cons are obviously that people could lose a lot of money. It can be very easy to get caught up in this whole gamification. You're swiping for stocks like you would on swiping for dates on Tinder, and then you get into something that
literally you can literally do that.
You can literally just press buttons, open a trading account in minutes. It's so easy.
I don't think people realize this, because I mean, maybe people do that aren't journalists and not allowed to trade. Like, we're not allowed to trade stocks. Like, that's not something we can do, but it's literally a game on some apps.
And maybe go through where it used to be to where it is today to show the extremes.
Yeah. So, I mean, a few decades ago, if you wanted to buy a company that your friends were talking about at a dinner party, say it was $50 a share, you call your stockbroker up, you ask to buy a round lot of 100 shares. That's $5,000. Just for one stake in one company. If you want to be diversified, say you want 20 companies, you need $100,000. That's crazy for most people. Now with fractional shares, you can buy just a slice of a stock. And to top that all off, there's the fees that kept decreasing. Back in just even 2005, fees on average were $13 a trade. Now it's $0. So it's been a drastic transformation in just a few decades. And on top of that, you've seen the rise of these apps, the Robinhood. So now, I mean, teenagers are betting money in the stock market now.
So is it the democratization of finance and investing, which many have been pushing for years, I feel like, as a good thing? Or is it not so good that you make a trade and you maybe make some money and confetti comes down and you're like, yay, Yay!
I mean, there's huge risks.
Are you removed from the reality that there's money involved here?
I mean, you definitely are. There's a huge risk. That's what everyone was saying in 2021. I hope that, people are getting smarter about this. And I will say that some of the experts I talked to for the story said that their big fear was not people getting involved in stocks that were risky, but it was that they would get burnt and then they would get out of the stock market forever. Whereas we know that investing in a diversified way is a good way to build long-term wealth.
What's different, though? Because you could always lose money, right? And you could always, is it something different because of the way it's done? What is the big difference?
I think it's that it's become a cultural thing as well. So it's one, it's easier. Two, it's an app on your phone, and it's something that people talk about with their friends. So I talked to one professor for the story who teaches an intro to finance class at her college, and she said all these students in her class have a stock trading app. I mean, and these aren't just finance majors; these are regular kids.
I have to say there's a quote that we love, and it's from Peter Atwater over at William and Mary. He's an economics professor there, and he says trading has become interchangeable with the same kind of online betting that we're seeing for games and in the sports world. It's part of a gambling zeitgeist. And I do think about the rise of online gambling.
Yeah, and gaming, as they call it, Carol.
Yeah. Sorry.
Gaming.
Sorry.
Yeah, gambling doesn't have the connotation, but I agree with you.
But it's gambling.
And that's what Peter Atwater says. There's also someone you spoke to for this piece that's expressed concern about somebody potentially losing money in their, younger years, and then being turned off to the idea that this is a tool that people should be using to save for the future.
Well, and that's a huge risk. Even just the conversation that we're having about it, people hearing, stock trading, people losing money, and they think, oh no, the stock market in general is scary, it's bad, it's risky.
Yeah.
But we know that, diversified portfolios of stocks and bonds are traditionally a great way to build wealth over time. And so it's also good for the stock market when more people are investing and buying shares. So there's a bunch of cultural forces at work here.
What about diversified portfolios of meme stocks, Carol? Get some AMC, Bed Bath & Beyond no longer around.
Diversification. Help
Throw
me out
some
here.
GameStop in there.
The people you talk to, the individual investors who are doing it, using their phones to make trades, do they understand the risks of investing?
I mean, I think yes and no. That's the thing with a lot of these people. I mean, we talk about people losing money. For the vast majority of people that lose money, it's not their entire life savings. They've lost a couple $1,000s, which is a lot of money still, but it's not going to ruin someone's life. Same thing with the crypto meltdown. It's like you go and you try to find these people that have lost everything. Luckily, it's pretty rare. So for most of these people, they bounce back. But I think with a lot of people, it's you learn by error.
You know what I thought was interesting is you really, though, have some great data in here, and you talk about members of Gen Z start investing when they're 19 on average. That's according to a Charles Schwab survey released in June. That compares with 32 for Gen X and 35 for baby boomers. Schwab also found that almost 3 in 5 Americans today are investing in stocks. I thought it just gave me some clarity about, kind of who's investing.
I mean, 19 years old, that is so young.
As you write in your piece, brains aren't fully developed until people reach their mid-20s.
Yeah. I don't even know if I knew how to use a credit card properly at 19. I mean, let alone buying stocks. It's wild.
It's very interesting, right? Yeah. Anyway, like we said, a lot of information. You really give us some context and color about exactly what's going on, especially when it comes to a younger generation investing. Claire, thank you so much.
Thank you.
Claire Ballentine. She's personal finance reporter at Bloomberg News.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, if you're like most people, you probably don't think about the Tuscan city of Pisa when you go to the ATM to get cash. Send someone money on Zelle or Venmo, or get ready for earnings from JP Morgan, Citigroup, and Wells Fargo, which, by the way,
they are
kicking off bank earnings this week, Carol.
They are. Yet banking, as we know it, dates back to the Republic of Pisa in the 12th century. And to understand modern banking, our next guest argues we must also look to the early years of the Bank of England, Imperial Spain, the United States during the American Revolution, and the Bolshevik Russia in 1917 through 1923, among other case studies in history. I always think about it. You got to look back to kind of understand where we are today.
Paolo Zannoni is executive chair of Prada and international advisor to the executive office of Goldman Sachs International. He's also the former president of Fiat USA. He's got a new book out. It's called Money and Promises, 7 Deals that changed the world. Paolo joins us from Milan. Paolo, how are you?
Not too bad, thank you. And you?
We're doing well, thanks. Hey, you are a historian. You're also, so much of your experience comes in the world of business. We'll talk about all of that. Why do you think it's important that everyone understand the history of banking?
Because I think it's the best way to understand the core business of banking and what banking is all about. I think that if you see it, how it developed across century without changing that much, I mean the core, you get an idea of what really lies at the heart of banking, and that's debt.
That's such a fascinating thing to say when we talk about fintech and disruption and innovation in the financial space. But what you're saying is if you go back, right, to the Tuscan city of Pisa, a lot of what we're doing today was started back then, right? And we continue to do it.
Yeah. At least the core of it. Of course, it changed, but the essence of the banking business was there already. And those people understood it so well, and they spell it out in their ledgers in such a way that it comes across with an incredible clarity.
Can you talk a little bit about the writing process here? Because the book relies on some primary research that you did.
The book is both on secondary and on primary research.
Talk about the primary research and what you did here.
Yeah, okay. Now, I know it was a long process. And so let's say, for instance, let's take Venice, for instance. Everybody loves Venice. Venice is an incredible city. And the Venetian Republic that lasted for about 1,000 years, they were, they were very clever, and they like writing everything. And so if you go to the state archives of Venice, you have probably about 70 miles of document.
Wow.
Where if you are careful and if you are lucky, you can find almost everything and anything about the history of the Republic of Venice and what they were all about. And I was either clever or lucky, probably more the second than the first. Mm-hmm. And I was able to find the ledger of the first 6 months of operation of probably the first public bank in the Western world, which was the Banco Giro. And if you read that ledger, you immediately get a pretty good idea of the way Banco Giro was helpful to the state. See, what Banco Giro was essentially doing was an exchange of debt. His asset were the public debt, the promises to pay of the various branches of the Republic of Venice, and his liabilities were the promises to pay the supplier of those branches. And in this way, Banco Giro was immediately converting public debt into purchasing power, and purchasing power that was accepted by everyone. That was marvelous. And Banco Giro for 200 years was the only bank in the Republic of Venice, and that bank allowed Venice to go on for 200 years, even when it had lost most of these trading routes and most of these colonies.
Right. Well, it's interesting too. You do talk about, right at the top of the book, that debt is not a bad thing. And I think we often talk about good debt, bad debt, but you do, as you just explained, how debt can give people, companies, institutions leverage, governments leverage, right, to do so much more.
Modern money is debt.
What?
The currency of modern nation is the promises to pay of the banking system of that nation. That's the essence of it.
So we have a lot of discussions about debt today, certainly U.S. government debt, ballooning debt. Yeah. We worry about consumer debt. We worry about higher education debt, credit card debt. Are we
we are
wrong
right
to
to
be
worry.
what?
And we are right to worry, but
Okay.
that debt in many cases is also the asset of a bank. And based on those assets, the bank issues the same amount of liability, and the liability of the banks, of a bank and of the banking system are money. They are purchasing power available for everything, for buy refrigerators or for investing in defense goods or in whatever.
Well, why is it good for states to have debt?
Modern money is a debt of the banking system.
Why is it good for states specifically to have debt?
Because that's a way they transform a public debt into purchasing power that is immediately available. It's exceedingly clear in the ledger of the Banco Giro. See, at one point, the people in Venice were starving, and there was an office called the Grain Office that was in charge of purchasing supplies around the world. And the way Banco Giro helped the Grain Office was that the Grain Office offered to pay Banco Giro, and that became an asset of the bank. And on the basis of that, the bank could issue the same amount of liabilities, and those liabilities were money. And the Grain Office was able to purchase wheat and distribute it to the city. That's an incredible, clear example, in my opinion, of how public debt became purchasing power through the intermediation of the bank. The bank didn't do anything else that exchange debt. The debt of the state for the debt of the banks. But the debt of the banks was money.
Paolo, we only have about a minute left here. There is a chapter on American dreams. As you say, there's 7 deals that change the world. Just tee up in about 40 seconds, if you could, about what you get into when it comes to what went on in America. Just quickly.
The first public bank in America was the Bank of North America. And the Bank of North America was doing exactly what Banco Giro was doing. The first shareholder and the first debtor of the Bank of North America was the Continental Congress. And the Bank of North America was making bank money available to the Continental Congress. And bank money was not like the Continentals. It didn't lose purchasing power. It did not devalue. It had the same purchasing power of silver and gold money and gold coins. So
yeah, well, you tee it up. Yeah, no,
Sorry.
you tee it up well, and as you said, there's 7 that you get into in particular, and I think it's just such an interesting understanding of where we are today. We're so delighted that you were able to give us a tease into it and all of it. Paolo Zannoni, he is executive chairman of Prada, and of course his new book is Money and Promises: 7 Deals That Changed the World.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under about 18 minutes left in today's trading session. I feel like this has been the trade for most of the day, although we've been bouncing around a little bit on the NASDAQ 100. Call it, slightly higher, but a little bit lower on the S&P and the Dow right now.
We're orange on the S&P.
We're orange?
We're orange.
Where's orange?
Right there.
Oh.
Now red, as soon as you looked over. Orange is neither green nor red.
How can that be? You're either up or you're down, aren't you?
It was 0.00. It was literally flat. There, now it is again.
I know. It's that kind of a day. We've got a lot coming up. So we're curious to see what Lauren Sanfilippo has to say. She's Senior Investment Strategist from Merrill and Bank of America Private Bank. She joins us from Maryland on this Monday. Lauren, good to have you here with Tim and myself. How are you? Do we have Lauren?
I don't think she can hear us. We're gonna work on her audio, and we're gonna get Lauren back in just a minute. In the meantime, I want to go back to something that Abigail Doolittle said, which I thought was really interesting. She said that basically the S&P 500, at the index level, is because it's flat, is masking some pretty big moves that we're seeing in underlying equities. Like Meta Platforms is accounting for 3.1 points to the downside right now. It's down 2.2%. You got Microsoft down 0.5 percentage point. ServiceNow, one of my decliners, down 5%, Carol. Chipotle, another one of my decliners, down 5.8%.
It is down a lot. And then you've got a name, like I've been watching the semiconductor space today. I mean, Intel has been a top gainer in both the S&P 500 and the NASDAQ 100. It's up, looks like about 6% as we speak. But if I look, I'm going to pull up the Philadelphia Semiconductor Index, kind of been watching it throughout the session. There are 30 names in the index. 29 are higher today. Intel at the top of that list. AMD is up about 3.5%. Marvell is up more than 3%. And you've just got one to the downside. Micron is lower in today's session. So it's just interesting. There have been some analysts coming out raising their price targets on NVIDIA specifically, but other analysts talking about other names in the sector, including Intel, in terms of some of the trends that are going on and how they can stand to benefit.
Well, let's get back to Lauren Sanfilippo, Senior Investment Strategist for Merrill and Bank of America Private Bank, joining us from Maryland. Lauren, how are you? Still?
Good.
Oh, there we go.
Nice to be with you. Sorry about the technical difficulties.
No worries. Sounds like there's a little bit of a delay, so we're going to let you breathe a little bit. How are you looking at the market? I mean, we're completely flat on the S&P 500 for the day, but as we were talking about, masking some kind of big underlying moves. What's your view?
Yeah, so not flat if you look at last week, right? I mean, we're seeing new all-time highs again on the index level. And again, it's that story of that narrow market. So I think there's more of that probably through Q2 earnings, which we kick off at the end of the week with the banks, of course. And then maybe Q3 earnings, we see a bit more of that broadening. But that's really the story that we're talking to investors about.
Lauren, how are you thinking about this week? There is so much going on, right? Jay Powell is going to be up on Capitol Hill. You've got a lot of economic statistics coming away, including some reads on inflation again. And then, of course, the earnings season does get underway later this week. It's not just the big banks, but that's obviously a focal point here. Are we just kind of in a wait and see mode?
We are in so much that on Friday we saw that labor market data come in a bit cooler, and then we'll get more confirmation on the second part of the Fed's dual mandate. Inflation, we'll get that CPI print, that PPI print this week. And then, of course, the Fed's focus will be on that PCE print, but it's a good sort of gauge for where the PCE could be going later in the month. So a lot, you're right, a lot to focus on here. And then there's some election turmoil as well we're seeing overseas. So there's a lot to look at. But given it all, I mean, the VIX is still fairly subdued around that 12 level. So we're sort of putting that all together and thinking about sort of what that market sort of action could be around mega cap tech and actually non-tech opportunities as well.
Okay, you talked about election volatility overseas. What about election volatility here in the U.S.?
True. And we will see a lot of that ramp up closer to the fall, of course. You see that VIX spike right before the election, right? So more to come for sure, but plenty of headlines and noise now. It's unfortunate that we got an early start on all of this sort of campaign season and all that.
You know, I'm looking at some research that you and Joe Quinlan put out June 25th, and it says pessimism sells, but optimism pays. 10 reasons for optimism on America's birthday. So are you more the glass is half full versus half empty when you look at the U.S. equity market?
That longer term perspective, yes, I would say. Just in terms of
but what's longer term?
This U.S. economy
longer
has proven.
Lauren,
we're coming off of Q1 growth rates of 1.4%.
Oh, forgive me. I know we have a delay, so I'm so sorry to everybody. I do want to ask you, though, when you say longer term, what does longer term mean to you?
Well, in terms of asset allocation, we are looking at that U.S. as that preferred region. You're seeing that clearly in the flows for investors allocating to that U.S. trade. Still, investors aren't so much asking us about international. We do think that global growth has bottomed, but we're not yet fishing overseas. And that's sort of been the trade. I mean, it's that resiliency of the U.S. economy. It's that foreigners, their demand also for U.S. assets. So it's still our preferred region, the bias that we've been carrying for some time now.
What changes for you, though, to make international equities more of an opportunity or more attractive? What do you need to see?
Well, certainly not valuations, considering valuations are beaten up enough, right? But I just worry that international equities could probably stay cheap for some time. Just because they're cheap doesn't mean that they couldn't get cheaper. So I'd like to see a little bit of a return of the fundamentals, right? So like looking at growth rates even, I think that matters. And I do think you're seeing a little bit of a bottoming now, but I want to be sure of that before we sort of dip our toe into international.
The biggest risk, Lauren, to the U.S. equity trade in your view right now?
The biggest risk, I would say, is maybe not what we're looking at for Q3 and what consensus estimates are looking at for the earnings trade. If you think about the Mag 7 catching down and the 493 other catching up, I understand that growth rates for the Mag 7 will come down, right? That rate of change, that makes sense to me. I think you do need to see a little bit of a cyclical bottom here in the U.S. The ISM prints from last week worried me a bit in that the services side of things, which is the bulk of our economy, did weaken some. So I worry about that trade, that 493 catching up. I think the market has remained irrationally narrow for some time now. I know that we've settled into that now year to date and even parts of last year, but that broadening out, I think that's sort of what that risk.
Lauren Sanfilippo, Senior Investment Strategist for Merrill and Bank of America Private Bank, joining us from Maryland.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.